Hello traders, and welcome to yet another episode. And in this episode, I want to address the question of prop-firm trading, what we call proprietary trading. I've been receiving this question severally, and I thought to do a video on it, basically to address the concerns. So when you're talking about prop-firm trading, these are challenges, and you need to pass the challenge first of all. So this is whereby you go, you choose a prop-firm. And then after you choose a prop-firm, you take a challenge, or you buy or you purchase a challenge. So it is important to be able to know how to go about it in terms of ensuring that as a trader, you're going to pass the challenge. But even before we go through what I've prepared here, or basically some tips in terms of helping you to pass the challenge, what I'll want you to know is that if you're still not yet successful, if you're still not yet trading successfully in your own account, therefore you'll spend a lot of money in proprietary trading. You'll be buying challenges and failing. You buy, you fail. You buy, you fail. So the key thing before you start looking at the trading challenges is to ensure that first of all, you are successfully trading in your own personal account, because in your own personal account, you are the one to set your own rules. It is not as strict as the prop-firm trading. The prop-firm trading has strict rules because, again, this is somebody's money that you're being given to trade. Therefore, the person needs to ensure that they have protection for their cash. So the first thing when you're looking about how to trade prop-firms and pass the challenge, the key thing that you need to understand is how is the challenge structured, right? So you need to understand the purpose and the structure of prop-firms challenges. So you'll find that usually the key goal for the challenge is twofold, or it is in two ways. First, they serve as a vetting process whereby it allows prop-firms to identify talented traders without risking significant capital upfront. So the reason why they are giving you a challenge before they give you a live-funded account is to be able to vet or to look for successful traders, right? To be able to know who are these successful traders, and they'll do this through the challenge. So once you get to pass that challenge, the other purpose of the prop-firms is that they'll provide you with an opportunity to showcase your skill and earn the right to trade with large capital. So they are giving you an opportunity to showcase your skill as a trader. And the reason why I'm saying if you're not a successful trader, therefore prop-firms is not something that you can think of. So first of all, you have to be successful. Then the other thing that you need to understand is the different types of challenges. You find that prop-firms have different types of challenges. For instance, if I give an example of FTMO. So FTMO, they are very basic in terms of their challenge, but their challenge is distinguished into two ways, depending on the account type. So there is an account type whereby you can trade, allows you to hold trades overnight, over the weekend, and also trade fundamentals. There is an account that also prohibits you from holding trades over the weekend, and also it does not allow you to trade the news. So you'll find that depending on which prop-firms you are going to choose, the key thing is to understand the different types of challenges. Then once you understand the different types of challenges, the other thing that you need to know is the common rules and objectives. So rules are very important. Understanding the rules and objective of the challenge is very important. So you'll find that despite some certain commonalities that exist across most prop-firms, such as rules like the drawdown limits, which prevents traders from losing too much of the initial capital, and maybe the minimum trading days, which ensures that traders are consistently active, right? So you'll realize that there are those common rules, common objective, maximum drawdown, maximum daily drawdown, and the moment you violate any of these rules, the account or the challenge is terminated, meaning that you have lost the challenge. So before you start trading, once you purchase, or even before you purchase, you need to read those terms and conditions because they are there. And one of the mistakes I find with traders is that they rush so much into purchasing and starting trading immediately before even you read and understand the terms and conditions. Are they favorable? Are these common rules and objectives favorable to you as a trader? Will you be able to meet them? So it is important to understand this kind of risk. In terms of lot sizing, they'll have rules maybe in terms of maybe the strategy of trading, right? Because some maybe don't allow like high frequency trading. The others that don't allow maybe probably what we call hedging. The others that do not allow you doing the straddle, right? So it depends. So, and you have to look at this rule keenly, one after another, and check whether they are favorable to you as a trader. Then the other thing that you need to understand now, after understanding ProFarm challenges, how they are structured, different types, the purpose of the challenge, and the common rules and objective. The other thing that becomes important is for you now to prepare the challenge. Prepare for the challenge. Now that you have understood the rules, all right? So how do you prepare the challenge for the challenge? For you to be able to successfully navigate through the ProFarm challenges, it will require you to have what we call a solid trading plan. So a trading plan is what I call, in a very simple language or in very simple definition, a trading plan is what I call a trader's constitution. So when you talk about constitution, this is a document that contains laws or regulations, maybe for a country, and it states what needs to be done and what needs not to be done. A violation of the constitution might lead to a severe punishment by law. And therefore, a violation of your trading plan might lead to severe losses for you as a trader, meaning that you lose your challenge. And the moment that you lose your challenge, meaning that you have lost money because you purchased the challenge. So when you're developing your trading plan, the things that you need to have in your trading plan is things to do with risk management. So you need to define your risk management, how you're going to risk while taking these trades. For instance, the rule of thumb in risk management is that you do not risk more than 1 to 2% of your account. So you need to define, and I would recommend at least 1%. Don't risk more than 1%. 1%, because these are pro firms, they have very tight rules. Then the other thing in your trading plan is what we call a journal. You have to journal those trades. As you take each trade, you have to journal it. Then in your trading plan, there has to be rules that you're going to follow. For instance, depending on what type of trader you are, maybe defining which instruments to trade and which ones not to trade. And any other rule, like maybe probably when to take trades, your strategy well defined in your trading plan, right? So if you don't have a trading plan, what you have is a plan to fail. So trading plan is very important. So you need to develop a trading plan as you prepare for this challenge. Then there is what I call, you need to prepare for tools and resources that you're going to use. For instance, most of the pro firms right now, they are not using the MetaTrader. So there are other softwares that they are using in terms of trading. So you need to familiarize yourself with these types of softwares. Also, mental and psychological readiness is very important. So what you'll need to understand is that when you trade under pressure, chances are likely that you're going to lose the challenge. So you need to cultivate a mindset that is patient, focused, and resilience to stress. So when you're preparing for these ProFarms, it is just more than learning to trade, because it involves creating a comprehensive plan that encompasses a risk management, strategic trade selection, and disciplined execution of your trades based on a solid mental fortitude. The third thing that now you need to understand are the vital strategies for success. So what are these vital strategies for success? Number one, again, I repeat, risk management. So the purpose of risk management is for capital protection. How are you going to protect your capital? Risk to reward ratio, a very good way of protecting your capital. Use a risk to reward ratio of at least 1:2. When you're risking $10, you're targeting $20. How do you protect your capital? Not risking more than 1 to 2% of your account. All right. Then there has to be consistency, or what I call consistent position sizing. So you have to sit down and come up with a good plan in terms of lot sizing. As your account increases in balance, how will your lot size increase? Also, you need to have or to use what we call stop loss orders. And actually, this is very common with most of the ProFarm challenges. They know traders don't use stop loss. So one of the rules is that you find most of the ProFarms, they'll say that immediately you take a trade, in less than 1 minute, you should have set your stop loss, because they know trading without a stop loss, you are risking their capital. Other types of risk management, when you've already executed the trade, putting your stop loss at break even, taking partial profit, and trailing your profits. Strategy number 2 that is going to see you succeed in ProFarm trading is consistency. Steady performance over high gains. So it's not about the gains that you're making, but it's all about consistent. Remember again, you'll not win all your trades. No one wins in the market 100%. But what will be important is consistency and discipline. Consistency and discipline. Then the psychological readiness, again, is very, very, very important. Psychological readiness is very, very important. Don't trade under pressure. Don't trade when you are emotional. So when you feel your mind is not in a good position to be able to trade, please don't engage in trading, right? Please don't engage in trading. So in a nutshell, if I can be able to summarize these vital strategies for success, or basically what I call tips for passing a ProFarm challenge. Number one, understand terms and use thoroughly. The terms and conditions of the ProFarm. It's good to read word after word and understand, because the moment you violate any of the rules, you are done. You lose the challenge. Number two, limit your risk less than 2%. That is, do not risk more than 1 to 2%. And for ProFarm trading, actually, like I said, I would recommend limiting your risk to less than 1% per trade. Less than 1% per trade. right? Because they have very strict rules. There is what we call the maximum daily drawdown. And once you violate the maximum daily drawdown, again, you have lost the challenge. Number 3, the strategy or your trading strategy is very important. So you have to backtest your strategy, or you should have backtested your strategy and seen that it is a winning strategy or a high probability strategy. Number 4, avoid over-risking. Over-risking, for instance, when you are trading correlated currency pairs. Because once you do that, you're basically increasing the risk. Like you are in a trade of GBP USD, and also at the same time, you are in a trade of GBP Euro USD, or maybe GBP AUD. So there you have over-risked the GBP. So in case we have any worse news that affect GBP, goes against your trades, it will increase the risk of your trades and you will lose significantly. Number 5, check whether you are trading, your Profam allows you to trade a news. So you find that sometimes these fundamentals can be very favorable. Sometimes they can be very unfavorable, as in depending on how the fundamentals are going to come out. Sometimes you find that they might favor you, sometimes they might not favor you. So if you're not confident about fundamentals, please, during the fundamental time, stay away from the market, right? Stay away from the market. Also, number 6, it's good to adhere to a trading plan. I've talked about a trading plan. Please make sure that you adhere to your trading plan, because that is what is going to sustain you in the game for long. It's the roadmap guiding you in terms of what you're supposed to do. And in your trading plan, what is very important, again, is the trading journal. I did a video on how to create a trading journal, so you can check that video and learn more about the trading journal. So then after that, we have common Profam trading mistakes, and we shall discuss them and show you and also discuss how to avoid these mistakes. So the normal mistakes that we make is what I call overtrading and emotional trading. Very serious mistake. Overtrading occurs when traders are driven by emotions or the urge to meet profit targets quickly, make more trades than their strategy dictates. So a Profam will give you, right now actually, Profams have unlimited time to pass the challenge, not like before whereby you are given maybe the first phase 60 days, the second phase 30 calendar days. So that one came sometimes with a lot of pressure, because you'll be trading to meet not only the target, but also to meet the target within the deadline given. But right now, there is no duration, it's unlimited. So there is no need to rush in terms of trying to pass the challenge quickly, because the moment you tend to rush, then you'll tend to overtrade and emotions will come in, and I tell you for sure, you will fail. How do you avoid overtrading and emotional trading? Set strict trading limits. Define the number of trades or the maximum risk you are willing to take per day. Number 2, stick to your trading plan. Discipline is very key in Forex trading. Do not deviate from your strategy just because a few losses or the temptation of seemingly lucrative opportunities in the markets. And number 3, develop techniques to manage emotions, such as taking break after a loss or practicing mindfulness, or what I call meditation. The other common mistake when trading Profam is lack of planning. So you find that traders enter the challenge without a comprehensive trading plan. And basically what will happen, like I said, If you don't have a plan, then your plan is to fail. So a lack of trading plan will basically lead to inconsistency, poor risk management, and ultimate failure of the challenge. How do you avoid lack of planning? Develop a detailed trading plan, test your trading plan, and again, this trading plan is subject to regular review so as to adjust what is working and what is not working. The other mistake that people make when trading ProFarm is ignoring the market condition. No, the market is dynamic, so you also need to be dynamic. You need to adapt to market conditions. Like right now, the markets are about to be very volatile. We are nearing the US election in 2 weeks' time from now. So you find that the markets will be very volatile. So it's good to adapt, all right? And how do you adapt to market conditions? Being informed, or what I say, continuous learning. So you need to stay updated with the financial news and also the economic news that leads to market trends. You need to be adaptable, that is willing to adjust your strategy in response to market changes, and also use of analytical tools. That is, you can utilize technical and fundamental analysis tools to make more informed decision. The second last way on how to pass the challenge, ProFarm challenge, is learning from successful traders. The key thing with these ProFarms, one of the things that they are now embracing is they are giving testimonials of those successful traders that have successfully completed the challenge, those traders that are managing ProFarms and making good cash out of them. So they always have these interviews basically for these traders to share their experience, to share how they do it and how they're able to be successful. So listening to these kind of videos, once they are sent in your emails or when you go to their website or their YouTube, it is very important, because when you hear a testimonial, what it does is that it charges you, or it gives you the motivation that even you yourself you can do. And of course, you learn one or two things, one or two secrets from these interviews with these successful traders. So it is very effective to ensure that you are learning from successful ProFarm traders, not only ProFarm traders, but even other successful traders in the financial market. So that tells you that networking is very important, mentorship is very important, continuous learning and adoption is very important as well. And then the last thing that you need to do is to build, the last thing that we can look at, which is again optional, is building a career in ProFarm trading. How do you build a career in ProFarm trading? You realize that passing a ProFarm challenge is just the beginning of what can be a rewarding career in proprietary trading. So the first way is to capitalize on the opportunity. So ProFarms, what they have done is they are giving you an opportunity to access capital, because most of the traders say that capital is an issue. So if you are a successful traders and you don't have capital, then the best way to get capital is to using the ProFarm challenges, because the ProFarm challenges will give you an account with huge capital. So with the huge capital and the skill, that gives you an opportunity to make some good money. And the moment you make those good money, the way I can advise you is that use some of that money to fund your own live account, because there is nothing as sweet as trading an account that you know it is yours, because you're not trading under pressure, because you know the money is yours nevertheless, right? So once you're making those profits, withdraw those profits, use some of those profits to fund your live accounts, because again, you never know. We don't know the destiny of these prop firms. Maybe sometimes there'll be regulation that we cannot trade the prop firms, or maybe they'll come to an end. So the key thing is you capitalize on the opportunity to make money with somebody's money. This is actually what we call leverage, right? In simpler term, I'll call it the leverage. So utilize this opportunity or capitalize on this opportunity basically to fund your own live account. Then networking and professional growth is very important. So you realize now you'll be interacting with so many traders. So it's good when you're interacting with these traders, building networks with other traders and industry professionals is very, very, very valuable thing that you can do for yourself. So what it does is that it opens doors to new ideas, strategies, and potential career advancement. So from this prop firm trading, if you've been wishing to become a fund manager, therefore, this is where you should start actually managing these prop firms, because here we don't have those strict rules. You know, when you want to become a fund manager, you have to be licensed and regulated within your jurisdiction. But with prop firm, it gives you that opportunity to manage a portfolio without so many rules and regulation in terms of government regulations. And when you find yourself being successful in terms of prop firming, then you can think even of becoming a fund manager or an hedge manager in future. Right, but you cannot just wake up today and say that you want to become an hedge fund manager. What have you managed before, so that you can know that you can be able to manage other people's fund, right? So, and this can actually be a long-term career. So consider your long-term goals in prop firm trading. So like I've said, are you aiming to manage large funds, specialize in a particular market, or develop your own trading team? So you need to have clear objectives that will help you in directing your efforts and aligning them with your career aspirations. So ladies and gentlemen, that said, I think I've been able to demystify or to elaborate in details about prop firm challenge. And one golden bonus that I'll give you is that if you are, for instance, you're trading a prop firm of 100,000 USD, and the maximum drawdown is 10%. So 10% of 100,000 USD is 10,000 USD. So when you're creating a trading plan, create a trading plan of 10,000 USD account and not 100,000 USD account. Why? Because you should not risk more than 100. You should not risk more than 10%, which is 10,000 USD. So when you're doing your plan, your trading journal, your trading plan, factor that you are not trading 100,000 USD account, but you are trading a 10K USD account, because the moment you blow that 10K, then your challenge is terminated. And I promise you, the moment you look at it in that perspective, you will have very proper risk management, and chances of passing that prop firm will be very high. So thank you so much, and see you in the next video. And I wish you the very best in your prop firm trading.